Dear ladies and gentlemen, dear colleagues, and above all, dear Piero, it's my great honor to welcome you to today's event on digital euro in the ever-changing payment landscape. With almost half of participants joining virtually, we can already reflect on how many aspects of our lives are becoming increasingly digitalized. Today, so that's something wrong with the electronics. Okay, today we're going to talk about what this means for our shared currency and what the Digital Euro project is all about. The development of monetary system and its impact on the economy has been a story of constant change. Human beings have been exchanging in trade with one another since organized societies have existed. First using barter to trade, they first simplified their lives by using common items as a medium of exchange, like grain or cattle. Then followed metals, then coins, then paper money. Then introduction of money as record book entries overseen by trusted intermediaries. We call that bank money. It has been a constant evolution over time, and advances in technology have closely accompanied significant growth in economic activity. Traditional paper records eventually transitioned to digital formats, transforming both the economy and society in fundamental ways. It seems only natural that this evolution still continues. Also due to a lot of innovations in security features and material, banknotes have stood the test of time. But our goal is also to make sure that we keep up with times. In recent years, the surge of digital innovations have emerged, unlocking entirely new opportunities. As a consequence of digitalization, the way we pay is changing. Expectations of customers have changed, to which the payment methods had to adopt. The share of cash payments at physical payment points in euro area has dropped significantly, as we know. At the same time, we also shop more online, where cash payment is a little bit of constraint, if even not possible. Slovenia is part of the same trend, though we seem to be a little bit more favorable of cash than the average in Europe. Digital payments are now a daily reality for most Europeans. Mobile apps, online payments, payment cards, name it, have redefined convenience and speed. But most of these payments are provided by private companies and privately controlled, in most cases from outside of Europe. In an increasingly unpredictable global environment, riddled with heightened geopolitical tensions, as we know, excessive reliance on foreign providers leaves us vulnerable to extreme pressure. It undermines our resilience and compromises our monetary sovereignty. Existence of digital euro would offer a solution, as Piero will explain. It would allow us to control our future, in fact. In Digital Euro project, we are thus investigating the possibility of issuing a central bank digital currency. Digital euro would enable consumers and businesses to make secure, rapid, and cost-effective payments fit for digital era. Digital euro would ensure that as economies go digital, the general public would retain access to the safest form of money, so a claim on central bank. The potential introduction of digital euro would not mean that cash or other current payment methods would become obsolete or unwanted or unwelcomed. Cash remains a cornerstone of our financial system. It must be emphasized that Eurosystem is fully committed to ensuring that cash remains a widely available and accepted means of payment for everyone in Europe. Not only does cash ensure financial inclusion, it also remains an important and reliable fallback option in case of power shortages, like we have seen in Iberian Peninsula a couple of weeks ago, or in case of cyber attacks. At the same time, we must ensure that citizens of Europe that our currency remains future-proof. For that, it needs to evolve in line with people's payment preferences. Like cash, paying with digital euro would be free of charge. Privacy and security preserving techniques would make it more private than current methods. The ECB in the euro system would not be able to identify who you are or what you are paying. To dive deeper into the topic, it's my great honor to introduce our speaker, Mr. Piero Cipollone, Executive Board Member of the ECB and the Chair of Eurosystem High-Level Task Force on Digital Euro. Mr. Cipollone has been serving as a member of Executive Board of European Central Bank since November 23. In his role, he is responsible for Directorate Banknotes, Directorate General International and European Relations, Directorate General Market Infrastructure and Payments. And before joining ECB, Mr. Cipollone has been Deputy Governor of the Banco d'Italia and a member of Board of the Italian Institute for Supervision of Insurance. He also served as a member of Coordination Group for Cross-Border Payments Program at the Bank of International Settlements and an Executive Director of the Board of the World Bank Group. Therefore, Churi is no other better equipped and placed to speak to us today about the future of money and digital euro. Therefore, dear Piero, the floor is yours.
So, good morning, everyone. It's a pleasure. First of all, let me thank Primoz for the kind words in introducing me again. It's a real pleasure to be here and to speak about this topic that is becoming very hot everywhere. And so, no better opportunity to engage with you, with the general public, to try to explain what we are doing, dispel some concern, highlight the opportunities, because often we talk about the risk, we have more difficulties in understanding the opportunities, which are big, as I'll try to explain in the next 20 minutes. So the ongoing shift in the way we pay is affecting the fundamental fabric of our economies. Slovenia has put digital transformation at the heart of its economic strategy, aiming to place the country among the top 5 most digitalized economies in Europe by 2030. An innovative and thriving digital payment ecosystem can play a key role in this journey. As a central bank, our responsibility is to accompany and enable this transition by ensuring that the shift to digital payments enhances accessibility and efficiency without creating fragmentation or new dependencies. Let me be clear up front. As Primoz said, this digital transformation does not mean that we will abandon cash. Cash is serving us well, and people remain attached to cash for good reasons. We at the ECB and the Eurosystem are fully committed to it. And the concrete proof of it is that we are about to issue, or at least to launch, the new series of the euro, of the banknotes, which will bear new designs. Actually, we just launched the tender for new design. So cash is king for us because it's the liability, the means of people that we provide to people for their everyday transaction. But the world is changing. And cash cannot be used for online transaction, which today, online transaction, represent more and more a large share of what we do. So about 1/3 of our transactions are online transactions. So we need to extend the benefit of cash to the digital sphere. By introducing a digital euro, we would aim to offer a digital equivalent of cash. And why? Because this preserves Europeans' freedom to pay with sovereign money, which is free for basic use, preserve privacy, foster resilience, and is accepted throughout the euro area for any digital payments. So essentially the same benefit of cash extended to a larger scope. In preparing for a digital euro, we are carrying out one of our core tasks as defined by the treaty. And when I say we, I'm referring to the euro system. One of our core is providing a means of payments with legal tender status and issuing money as a public good. This is it's part of our mandate, which is enshrined in the treaty. Given this fundamental role, if we were the only player in payments that did not go digital, it would be fair to ask whether we would be fulfilling our mandate. This is a very fundamental question that we need to ask. By preparing for a digital euro, we are simply adapting our job to the evolution of the technologies and the preference of people. This is particularly important in a monetary union like the euro area, where 25 years after the launch of the euro, will still lack a European solution that enables people to pay digitally through the euro area and for all types of payments. And this is especially relevant today at the time when dependencies of non-European solution could be weaponized. A digital euro would be a public-private cooperation with European payment service providers playing a key role in its distribution. This would allow the European PSP to retain fees and data and client relationship. By contrast, this relationship, the client relationship, could be threatened by payment solutions that seek to bypass banks, such as stable coins, which are currently dominated by non-bank, non-European issuer and mostly denominated in dollars. Moreover, a digital euro would enable payment service providers to scale up and offer their solutions throughout the euro area by leveraging the digital euro's infrastructure and acceptance network. This would remedy the current state of digital payments, which is a case in point of the situation described by Mario Draghi in his recent report, namely that the fragmentation of the European market along national lines prevents European firms from being competitive on a European level, let alone globally. In my remarks today, I will explore the challenges presented by the current digital transition in payments. I will then explain how the digital euro offers opportunities to address them. Slovenia offers an appealing snapshot of the transformation which is underway in many European economies. Slovenians are still deeply attached to cash. In 2024, nearly 2/3 of payments at the physical location in Slovenia were made in cash. Yet, digitalization has been advanced steadily, with the share of card payments at physical location rising to 29% in 2024, up from 19% in 2016. This development obviously is not unique to Slovenia. Across the euro area, increasing digitalization means that online shopping now accounts for over a third of a day-to-day retail transaction, while cash payments have fallen to just 24% in value terms. This shift underscores the importance for us as a central bank to not only safeguard trust in money in physical form, but increasingly in digital form too. Our robust defense of cash stems directly from our mandate to issue money that Europeans can use and access throughout the euro area for their day-to-day transaction. In fact, our work on the digital euro follows logically from our defense of cash. In a world where cash cannot be used for e-commerce transaction and where people are also increasingly prefer to pay digitally at the physical location, we must provide a digital equivalent of cash. This will preserve the freedom of Europeans to pay, knowing that a digital euro will be accepted wherever they can opt to pay digitally. And it will allow merchants to reconcile their consumer preference to pay digitally with the benefit of cash as a means of payments that protects from excessive fees and network disruptions. If we fail to act, we would not only be failing to fulfill our mandate, we would also risk the digital transformation reversing the progress we have made with Euro cash. At the present, we have no sovereign and inclusive digital means of payments with the legal tender status. As a result, the growing use of digital payments risks entrenching our dependency on a small number of private non-European players, subjecting our money to the kindness of the strangers. This dependency already results in higher fees for merchants and the transfer of taxpayer money in the form of lost signatures outside Europe. So today I would like to emphasize three major challenges posed by the ongoing transformation. The first challenge is that the increased use of digital payments results in a growing reliance on non-European payments providers, which is cause of concern. Two-thirds of card-based transactions in the euro area are processed by international card scheme. Some 13 euro area countries are entirely dependent on non-European system for payments. Slovenia is a case in point. Despite effort to promote local scheme, the Slovenian payments ecosystem remains reliant on international card scheme, which dominate the market. This dependence on non-European payments solution means that decision-taking outside Europe could affect Europeans' consumer ability to seamlessly conduct everyday digital transactions, hindering Europe's strategic autonomy. The second challenge is the persistent fragmentation of the European payments market. Despite the clear benefit of integration, we have not managed to unite the market. And even when the infrastructure and the European scheme are in place, like, for example, through TIPS and the SEPA instant credit transfer scheme, we have not yet seen the emergence of a pan-European instant account-to-account payment solution at the point of sale. European providers do not have the incentive or the capacity to invest in competitive, user-friendly, front-end solution across the euro area. Each of them has a distinct interest, priorities, and legacy investment, which make coordination very complex. For example, Slovenia instant payment scheme, FLIC, offers a promising user experience across various payment situations. However, its reach remains limited because it is only available to customers of Slovenian banks, excluding non-resident and domestic users of foreign banks. Moreover, merchant acceptance of FLICs does not yet match that of traditional card payments, partly because its customer base is limited. This reflects a vicious circle where limited acceptance discourages adoption and the other way around. Low adoption disincentivizes acceptance by the merchant. This reduces competition and make it impossible to scale up the solution offered by payment service providers. Thus, we are left with a patchwork of domestic solutions that lack the reach and the scale to compete effectively across the EU, and sometimes not even at the national level. In Slovenia, Caranta, a national scheme backed by the largest domestic bank, had a market share of just 0.20% in 2024. This fragmentation is not just inefficient. It makes digital payments more expensive and less convenient, placing a necessary burden on both consumer and merchants. It is estimated that merchants across the euro area pay around 3 billion every year to process international debit cards. The third challenge relates to the user experience offered by the existing solution. In Slovenia, for example, consumers are forced to use multiple apps, cards, and platforms to make payments, resulting in a fragmented and often frustrating user experience. These issues are not specific to Slovenia, of course. They reflect a wider European challenge that consists in the lack of a European-wide acceptance network for an open digital payment infrastructure that matches the reality of our increasing digital and interconnected economies. In light of these challenges, we need to ensure that the benefit of digital payments are enjoyed by all, while at the same time safeguarding our sovereignty and the trust that underpins our single currency. The digital euro would offer a comprehensive and smooth user experience for consumers that covers all use cases, payments in shop, online and between individuals. It would provide integrated online and offline functionalities, all while upholding the highest privacy standard. the offline functionality would offer a cash-like privacy with transaction detail known only to the payer and to the payee, nobody else. Such an all-in-one solution does not currently exist. And its introduction through the digital euro would mark a significant step forward for Europe. Because of this feature, digital euro would ensure that central bank money remain universally accessible for everybody and for everyday transaction, not just in physical form, but also digitally. It would guarantee that citizens can pay anywhere in the euro area using a trusted, risk-free instrument issued by the Eurosystem. This is consistent with the Eurosystem mandate under the treaty, the EU treaty, to issue the only means of payment that has legal tender status. A digital euro would be a modern expression of monetary sovereignty. And let me say that again. Digital euro is not intended to replace cash. It would complement it. We are unwavering in our commitment to cash that remains a vital tool for inclusion, personal freedom, and resilience in Slovenia as elsewhere in Europe. At the same time, our responsibility as a central bank is to ensure that as payments become increasingly digital, citizens can continue to benefit from the trust and the security that public money provides. In the long run, the existence of central bank money usable at the point of sale might be essential in preserving the trust in commercial bank money. Moreover, without a public digital alternative, consumer and merchant would be increasingly dependent on the term, price, and data practice set by a few, mostly non-European, private actors. For instance, over the past few years, the average net merchant service charges in the EU have nearly doubled, despite regulatory effort to contain them. Introducing a digital euro would provide an attractive alternative to foreign payment solution and is the only way to ensure Europe monetary sovereignty. Moreover, the digital euro would address the persistent fragmentation that is hampering the retail payment market. Just as the introduction of euro banknote united Europe 23 years ago and brought tangible benefit to its citizens, the digital euro has the potential to create a truly integrated digital payments landscape that preserve the two-tier payment system and the healthy equilibrium between public and private money that has served us so well for so long. As a central bank money, it would have legal tender status, meaning that it would be accepted everywhere, instantly generating powerful network effect. Leveraging its open standard and acceptance network, it would give European payment providers the scale and the certainty they need to innovate and expand. This would also benefit banks who are currently losing fees, data to the dominant international payment solution and could soon also lose deposit to stable coins, which are dominated by non-European firms and are dominated in US dollars for 99% of their value. I am about to close, and be patient with me for a couple of more minutes. For European payment service provider, Establishing common standard through the digital euro would enable platforms such as Flix to extend their reach domestically and to operate across all European countries from the outset, just as easily as national schemes do on within national borders. This would open the market to fairer competition, forcing established players to adjust the costs they impose on merchants, particularly small and medium-sized entrepreneurs. Consumer would ultimately benefit through lower price. We have designed the digital euro platform in such a way that it expands the range of possible conditional payments. Think, for example, of automatic reimbursement in the event of a train or flight delay, for example. This will increase the choices and stimulate innovation, leading to a rich and more user-friendly experience for everyone. The digital euro would rely on a new settlement ledger intended to support advanced payment functionalities, including conditional payments. Our prototyping and experimentation have shown that such payments can be implemented by leveraging application programming interface, or APIs as they are known. In recent months, we have partnered with some 70 merchants, fintech companies, startups, banks, and other payment service providers, including from Slovenia, to explore the potential of the digital euro to drive innovation. We will share our finding very soon. Let me conclude. Building an agile and robust digital payment ecosystem is essential for Europe's digital transformation. Ignoring this task risks resulting in a less convenient and more costly payment experience for consumers and merchants, including in Slovenia. The digital euro offers a solution, a European public good that complements cash, ensures trust, sovereignty, and universal access to secure, cost-free means of payments across the euro area. It will empower people and business in Slovenia and beyond to transact easily and safely, online and offline, at home and across borders. And it will allow European private payment solutions to scale up and become more competitive. Ultimately, digital euro is more than a currency innovation. It is a public commitment to the future of Europe's digital economy. It embodies our shared values of openness, resilience, and fairness, ensuring that as our economy evolves, no one is left behind and that Europe remains in control of its monetary destiny. Thank you very much for listening. I just want to...
Well, thank you, Piero, for this talk. It really did place the digital euro in the landscape of payments. Special thanks, really, for stressing the commitment to cash. As you observed rightly, Slovenians are really in love with cash, so we cannot get off cash so easily, and I'm pretty sure that, hearing it from one of the top officials of the European Central Bank that, in your words, cash is king, will help to placate the fears of, cash being replaced. And I'm pretty sure also your talk helped dispelling some myths surrounding, this project of digital euro. Now, maybe going into different stakeholders, starting with the common user. So you stressed some of the benefits, but a common user, who pays, maybe with cash, but when the electronic payments, they use their cards, they use, Google Pay, Apple Pay, and they probably wonder, why would I want digital euro? So what would you reply to such a question?
Well, the best way to think about what other people would perceive is to think to yourself, right? I am 63. I'm becoming old, right? And to pay, I have to juggle with so many pins, so many solutions. They take three pieces of plastic with you, sum up in the phone. Now, there is nothing fun in paying. People want to shop and want to pay easily. So the easier you can pay, the better. So if you can provide to people a simple, integrated solution, though you don't even know what is the rail, how the mechanics. You want to go, you want to buy a nice pair of shoes or whatever, and shop at the supermarket, pay easily in a fast way, in a way that is going to be reported by your bank in a simple way. So there is nothing fun in having many different pieces of plastic to pay. It's a matter of opportunity. You can choose it, but I think would be an important advantage for people to have a simple way to do something that is an ancillary activity. It's not the main activity. I don't wake up in the morning with the urgency to pay. I wake up in the morning with the urgency to buy, and the easier I can pay, the better. And digital euro will satisfy this need. That's my perception, at least. So, or what people are telling us from the survey that we are conducting.
So would you say that digital euro will fit into how people want to pay, or will it change the payment behavior of people?
Look, as a central bank, we don't have anything to say about the way people want to pay. What we are committed to do is provide to people the means of payment they want to satisfy their needs. We do not we don't want to condition the way people pay. We just want to stay in our remit. Our job, as I said in my speech, is enshrined in the treaty. We have the responsibility to provide simple means of payment to people. Now, cash has been with us for so many years and probably will stay with us for the coming years. However, providing only cash is limiting our mandate in some sense, because we are not offering a means of payment for an important part of everyday life for people, which is e-commerce. So to stay within our mandate, to satisfy our mandate, we need to offer a solution that is fit for the new era. We don't condition payment the way people, we don't dream to influence the way people would pay. We think we provide the means. But, and there is a but, by implementing this new system, we are thinking about the future, and we see that there are services that are not provided. I tried to give an example in my speech when I talked about conditional payments. If you think carefully, in a age of digital, electronic, we condition payment to a very simple things. Pay Marco at this point in time. That's it. I think we could do better. For example, we could condition payments to many different events which would provide additional services. I'm referring not a case that I thought, as I said, we had an experiment with 70 entities. One of the idea was, why do not condition payment to the train arriving on time rather than, asking for ex post to be reimbursed if the train arrives late. This is just one idea. We have 70 additional ideas that we want. We will publish the report in 2 months' time, so everyone can see how creativity can be supported by these new tools to provide new services to European citizens.
Yeah, but just to be very clear, right? These are services that will be provided
By
by
the
payment service provider, by the private.
Absolutely. We provide an opportunity, the infrastructure for the private sector to offer. In fact, those entities are private sector entities that partner with us in developing those
Yeah,
ideas.
we need to make it clear to our public, right, that digital euro will not be programmable money.
No,
So
absolutely.
Totally fungible. €1 will be freely used. It's not that you can condition. You can only use this €1 in this retailer.
Absolutely. Fully fungible. It's just it's not programmable money, which means money that can be used only for one specific use case. €1 is €1, exactly like banknote.
Yeah.
Exactly.
No,
like banknote.
okay. Thank you for helping dispelling this another myth, because occasionally this is another myth that resurfaces from time to time. Another one that it's constantly, it's not even maybe a myth, it's more like a conspiracy theory, is that the digital euro is the first step towards controlling people, so that the ECB in the grand scheme of the whole European Union wants to control its citizens. So in reality, behind this is the concern about privacy. So what are we doing about privacy?
No, this is very important. This is really important. And we have been spending much time on this from the very beginning, because you might remember that back in 2021, we conducted a survey through European citizens asking, what's your main concern? And privacy and security was one of the most important. So we really spend much time. So if you allow me, I want to be extremely clear on that. The simple answer is that the euro system will not see the identity of people. What the euro system will see are three things: a code representing the payer, an amount, and a code representing the payee. It is impossible for us to link the identity of the people to the code, because this link will be held at the PSP level, at the bank level. We will not be able to match that. But this is just the technological part. So we are adopting the most advanced cryptographic technique that are deployable at the level of a payment system like the ones we are constructing that has to process billions of transactions per day. So at the technological level, we are implementing the most advanced solution. This is for the online solution for the moment. I'm talking about the online solution, then I will say something about the offline solution. So this is the technology. So we have two other pillars important. One is the internal governance. So we are adopting the most rigorous internal governance, making very clear who can have access to the data, how they can manage, and what are their responsibilities. But this is not enough, because you can say, yeah, but those are nice words. We are committed to be audited by the Association of European Data Protection Officer, so we are open to be audited every year to make sure that people realize that we will walk our talk. We will be completely transparent. So technology, internal governance. The third pillar is what we called be open to the future. Marco knows this because we discussed a lot at the high-level task force. We want to be, and we are committed, the internal agreement, the Eurosystem has been that we are committed to deploy the most sophisticated and advanced private enhancing technique as soon as they are available. We know that there are people experimenting with new, more sophisticated technique, those that are called, based on this concept of zero-knowledge proof. Those are very sophisticated. Someone is already experimenting with that. We are in contact with that. One of those are people working at the Innovation Hub of the BRI. We are in contact with them. And we are committed that as soon as those techniques will be available to be deployed at an industrial level, not just at the experimental level, we will adopt it. We call this being open to the future. We don't want to stay behind. This is for the online. For the offline solution, the solution is as good as cash, because you exchange money, nobody knows who you transact with, so it's as good as money. So we think that The protection of privacy has been at the center of our reflection, and we think we worked for 2 years on that, and we think we have found a very robust solution that should definitely make people trust the system. Sorry for being so long, but this is very key. Key
Yeah,
issue.
I agree that's why I think it's one of the main concerns for the common people, and making sure that digital euro will be at least as private as any other digital solution, in some use cases even more private than what exists today. I think it's a very important point to stress. And yeah, if someone doesn't want to do digital transactions, they can still, as you said, cash is king. And
Yeah. I mean, oh, by the way, we will not force anyone to use the digital euro. Again, we are talking about freedom. I said this word freedom several times in my speech, because that's really key for us. Preserving the freedom of people to choose their own means of payment, not to be forced into one solution or another because of lack of alternatives.
There's another myth I really in the time that we have, I really want to touch to, and that's maybe in terms of payment service providers, the fear of becoming obsolete, but then also because this myth is among the general public is that the digital euro accounts will be held directly at the ECB or the national central banks. Now, why is this wrong? And what is the importance of payment service providers?
No, thank you, Marco, because this is key. Allow me to elaborate a little bit on that. From the very beginning, we decided that the banks and the European PSP need to be at the center of the project. For one fundamental reason. We want the PSP to be able to keep seeing the transaction of their clients. And I mentioned that. We want the PSP to preserve their client relationship. So the digital euro would be an additional service. Why so important? Because technology today is such that it's possible to unbundle the services that the bank offers. So if the payment service, the payment business leaves the banking sector, these are huge, profound consequences. The most intuitive of which will be the fact that the banks will not see the transaction of their clients anymore, which means that they lose data. And if they don't have data on their clients, it will be very difficult for them to implement innovative services like, for example, being able to assess the creditworthiness of their client on a real time. So from the very beginning, we thought that the banks need to be at the center of the relationship in the distribution of the digital euro. And that's what we have implemented. We could have gone a completely different way. We could have gone through a DLT system where the clients could access directly the relationship with the central bank through a blockchain, disintermediating completely the banking sector. Someone is doing this in a way that is not completely transparent, but that's what they are doing. We decide no. For us, the European PSP are central to this project, and from the very beginning we involved them also in the construction. We had a market advisory group from the very beginning, and we are constantly in contact with the European Retail Payment Board to share our choices and get their inputs in design this project. So PSP remain at the center of the project, and they will be remunerated for the services they will provide to the euro system in distributing the digital euro. So they are center both in the distribution, but also in the construction of the compensation model that will provide a fair compensation for the banks for the service they will provide to their clients.
So you were mentioning in your speech that the whole costs will be lower for the system and lower for the merchants, and in the end, customers will benefit from this. But now you're stressing, so the payment service providers will be compensated.
Yeah.
So in a similar way as they are compensated for other services that are providing now. So
Yeah. Well, let me put, there are two dimensions. There is our philosophy, and then for the legislator to decide and to a final word on the compensation model. But the basic thinking is the following. If the PSP will be compensated as they are compensated today, I'm referring, for example, to the issuer. If they are compensated as they are today compensated, they will have an advantage because they don't have to pay scheme fees. And those that are in this business know that the scheme fees can be pretty heavy, especially when you are dealing with international card scheme. The scheme fee will not be there, which means that the PSP will not, out of the revenues that they have from each transaction, for example, because of the interchange fees, out of that, they do not have to pay the scheme fee, and this is an important amount of it.
maybe one last question from me, and then we'll have time to take maybe one or two questions from the audience as well, but something that I'm sure it's one of the most interesting questions to all of them. When can I expect to walk across the street and pay with digital euro?
You know, Marco, this is a key question. Let me put into different way. There is a technical dimension to it, and there is a legislative dimension to it. We are working night and days to have the project ready, and we think that technically it will take between 2 and 3 years time to be able to do the first transaction. However, these 3 years, we don't know when they start. Why? Because we will not be able, and we will never decide to issue the digital euro if we don't have in place the legislation. So if the legislation will be in place by the end of 2020 years, then the clock starts at the end of 2025. If it's a year later, will be, so the starting point will depend on the legislation. The sooner we will have the legislation in place, the sooner we will see the project. Again, my estimate is that from a technical point of view, to build the platform and to integrate with the market, because you need to pilot, to experiment, it will take 3 years' time from the moment we start. When we start will depend on the legislation. The sooner we have in place the legislation, the sooner we will start to build the system.
Let's give it to the audience. Maybe now. Any questions?
Oh, sorry.
Thank you very much. Yeah, it's heard. I'm heard. Do you hear me? Yeah. Thank you very much, Mr. Cipollone, for this presentation, for your time visiting Slovenia. I'm Stanislava Zadravec, Banking Association of Slovenia, and given that this part is focused on the users of the digital euro, I have 1-2 questions related to that. It's very clear what are the strategic underlying reasons for this project taking place, even more nowadays. But now it seems to be a little bit of confusion around the question whether digital euro is cash or not. Because our understanding is that digital euro is another form of cash. This is how it is understood, part of ECB communication. But then on the other hand, even today you said we will keep the cash, meaning referring to coins and banknotes. So if digital euro is a legal tender, the same as banknotes and coins, so the question is that yes or no? Is digital euro cash or not? First question. Second, second question is, how do you see, you said legislation has to be placed, but ECB plays an extremely important role probably in designing the legislation. Now we have two regulations. One is on banknotes and coins, and the other on digital euro in the process of, in the legislative process. Now, we have also many countries that have now also Slovenia facing initiatives to place cash into the constitution as a basic right. Now, if all the three are cash, first, can we have some clarity here? And second, the merchandisers. Now we have circumstances where some of them, they refuse to take digital payments, and some of them, they refuse to take banknotes and coins payments. We shall expect that all the three forms shall become obligatory to be accepted. What's the vision about that?
So let me dispel this confusion. So when I say cash, I mean that digital euro is a liability of the central bank, very much like cash. Which means that is a sovereign money. Now, cash, there is the regulation that is going to clarify the concept of legal tender throughout Europe and make this clear once for all. So will be so the rule that is cash should be accepted, except when there are specific exclusion restriction specified by the law. The ECB is very committed to cash. In fact, we are asking to reduce as much as possible the exclusion restriction. Digital euro will be the same. In fact, the legislation foresees that will be legal tender. There are exclusions as well for those that do not accept, at least at the moment in the legislation, for those that at the moment do not accept any digital. If you don't accept digital payments because you don't have the machine, whatever, you are a small business, you are not obliged to accept the digital euro as well. But you need to be able to accept the digital euro if you accept digital payments. Because otherwise, when I say is cash, means that we will change one-to-one to cash because it's the same, it's a different physical form, but juridically and from the economic point of view is exactly the same. And the reason I'm trying to explain, because cash cannot be used for a piece of transaction that are becoming very important. We hope, and the fact that the two legislation were issued at the same time was meant to stress exactly the fact that digital euro is not meant to replace cash. We have the responsibility to supply. People will choose which solution to pay. That's not our business. Our business is to provide means of payment to the people. It's their choice how to provide. So, digital euro is legal tender, in this sense has the same function as cash. Second step, we are supporting and making clear, it's very clear, it's public in our opinion on the legal tender regulation, that we want to make sure that cash can be used as much as possible, reducing as much exclusion restriction. So this is more or less where we are.
Well, thank you. I'm sure there will be many more questions, but unfortunately we have a packed schedule, so we'll have to wrap it up. So thank you, Piero, for this, and thank you, audience, for being here, for listening, and also for the valuable questions. So have a nice rest of the day, and we'll have to move forward. Thank you.
Thank you very much. Thank you much.